Hey, what's going on, guys? Matt back with another video here. This one going to be a little bit of a roundup of more or less the different things that I'm looking at, an update on a stock that I had previously been covering back when it was a SPAC, and then another update on some Wall Street Bets news. So the first thing I want to jump into is actually a quick update on UWM, United Wholesale Mortgage. So what's the latest on UWM? Well, they had their Q4 earnings announcement. They now trade as UWMC as their ticker. And if you have been following along and been invested in UWM, you would know that it's been a little painful, especially when you're holding 400 shares at an average cost of $12. Nothing too crazy. I mean, I don't have an insane position in it, but back when it was at nearly $14, riding the SPAC hype, SPACs tend to have a cycle of hype focused around their letter of intent, their definitive agreement, and and then they usually tend to tail off and then spike again when they get closer to merger. UWM definitely spiked during the LOI, during the definitive agreement when it was announced, and that was some of the the best spikes in price that we were seeing. But as it started to tail off after that point, we never saw the spike back in price during the merger. And this is just speculation, but I believe that is mainly because since it is a real estate focused stock, it doesn't really have the hype factor. It doesn't have the PR, if you will, that some of these other EV SPACs, cannabis SPACs, whatever it is, that those tend to seem to generate. It's not a penny stock. It's just a solid company, and they, in their initial SEC filings, had mentioned that they would issue a 40-cent a share dividend. Well, they actually declared that yes, that is the case. Every quarter, we will be issuing a 10-cent dividend per share, which equates to 40 cents over the year per share. So that's not bad. At the current price right now, at roughly $11, you're talking about over 3%. If I was a heavy dividend stock investor, I would probably increase my portfolio in this and reap that nice over 3% dividend of a solid company that I see probably some great growth over the next years. Now, however, I do want to preface this that it's not all sunshine. The main reason I believe also that the stock never really went beyond the price it's at right now and took off post-merger is because of the valuation. The sentiment right now is that the valuation is too high. So the big question, the big thing that we're really looking to answer over the coming year, I would say, but really in the near term over their next earnings in Q1 2021 is going to be how are they going to address the fact that the refinance market and just the expected amount of transactions for buying homes, refinances, with that expected to now come down heavily from what it was in 2020 due to interest rates falling to record lows, as we know. How are they going to address that? Now, from previous videos where I've covered GHIV, now UWMC, I have gone into that they have these different apps that they're getting into that use artificial intelligence with how quickly they can make the transaction process for their brokers. There's all kinds of different technological items that they're working on and that they've actually already issued and put out there. However, how that translates to the balance sheet, we have yet to see until we see their next earnings and see how that trends against the overall market. Overall, I think it's a solid company. I think they're going to do well in the very, very long term. I'm holding my shares, so I'm still in the red because my cost basis is around $12. But I just wanted to give you guys an update on that in case you have been following along specifically for UWMC, and in case you're thinking about getting in and wanting a solid stock for some dividends. I think this is probably a great choice for you. Another piece of news I want to get into is actually something crazy that happened last night on Wall Street Bets. If you've been on Wall Street Bets longer than this GME squeeze talk, If you're one of the original, 1-2 million people prior to all of this, then you may know of the user ZJZ. He's a mod and he has a lot of respect on the forum. At around 1 o'clock this morning, he actually posted this post here, which is kind of tragic in my opinion. If you've been following the story around GameStop and the squeeze, you may have also heard that Netflix is going to be doing a docu-series on the GME squeeze. If you haven't, well, now you know. And there have been some people that have been reached out to speak as part of this docu-series. And with that happening, I'll just read a little bit of this post so you can understand what's going on. It looks like there's a bit of a hijacking going on Wall Street Bets. So ZJZ posts, we've been taken hostage by the top mods. They left for years and came back when they smelled money. They've been busy creating private email addresses to funnel all the press correspondence away for their own gain, talking crap about all the active mods and scrambling to get paid from some movie deal. That's just what we know. They refer to themselves as the board of directors and us as the mini mods. Long story short, this happened a long time ago with the person who originally created the sub, and they tried to monetize it. Nobody was on board, nobody liked it, and eventually the current mods that are on there every day, that have a lot of respect from the community, they were able to facilitate the forum staying as it always has been and having the original creator go away. Now it looks like we're undergoing something similar again, where now there are some mods that just want to take advantage of the situation and see how they can profit off of all the attention that WSB has right now. It looks like this mod is talking about how the forum is probably going to start pushing some kind of crypto platform. I really don't know what to say on this. It's really sad if that's what's going on. This post was actually removed, and anything mentioning it on Wall Street Bets is constantly getting removed. So what actually ended up happening was ZJZ created a new thread, or a new forum, I should say, a subreddit called Wall Street Bets Test, and it's already at 45,000 members in the last 5 hours since it was created. So word is getting out. If you didn't know, this is where that mod has basically kind of pushed as many people as he can to get away from Wall Street Bets right now with what's going on. I'm gonna keep trying to figure out what's going on so I can let you guys know as it happens, but just wanted to inform you all. So now I want to move on to some plays that I'm actually looking at in the clean energy sector. So I wanted to talk about this post, which, oh my gosh, I'm making a post that is stemming from our investing and not Wall Street Bets. Well, right now, if you go on Wall Street Bets, you would know that it's more or less an echo chamber on GameStop and AMC, and there is rarely anything other than those two tickers talked about right now. I understand why. I get it. I have no issues with that or anything like that. I'm all for the movement. However, I am still looking for other plays to make, and so with that, I had to branch out to some other subreddits. So with that, I want to jump into next Era Energy NEE and why I am making a play on this, and I'll let you know how I'm going to play this. I'm going to start by reading the post from our investing. I wasn't really planning on making a post on this, but I'd like to make the case for investing in a utilities company focused on clean energy as a smart play for the upcoming stimulus shift towards renewables. So what's Next Era Energy? It is the largest electric utility in the USA by market cap at $160 billion currently. Revenues of over $19.2 billion in 2019, operating income of $5.35 billion in 2019. About 14,000 employees throughout the US and Canada. The important subsidiaries include FP&L, Gulf Power Company, and then you also have Next Era Energy Capital Holdings, which is one of the largest operators of wind and solar projects in the world. Importantly, expansive holdings in the Midwest, also has numerous energy storage projects under their belt. They also have a 35% stake in Next Era Energy Partners, with Jim Robo being the CEO of both companies. So it's a utility company. There's nothing really exciting about that. However, there is a bill that Biden is pushing for $35 billion. I have a link over here. New stimulus bill includes $35.2 billion for new energy initiatives. And the play on this is that NextEra Energy is actually in a position to reap a lot of the benefits from this bill and receive a ton of funding, which of course can just improve their position and cause the stock to go up over time. How much can it go up? Is this a rocket to the moon type of play? No, it's not. So I want to go into why. As we've noted, it's an extremely healthy company, but what I want to touch on is that their PE ratio is 41. The energy utility sector average is around 19. This is more than double the average. So this would lead some to think that it is already overpriced and that all of this is already priced in. I believe that PE ratios right now are higher than they probably ever have been because of interest rates being so low and due to all the liquidity in the market right now. So I don't necessarily believe that a 41 PE ratio is as terrible. I do think it is on the high end, but I don't think it's as terrible as some people may think it is. So with that, I still believe that this is a good play. If you want to buy common stock, I think that this could actually go up over time. It's not going to be a rocket ship to the moon. I do believe that with this bill coming out, that they are in a position to reap the benefits of that and to do really, really well moving forward, as they always have been. I think the stock is going to grow, and I think it is a solid play. However, the play I am making is I am not going to buy common stock in this. I am going to buy leaps. So I've already purchased two January 2022 calls, I believe at like $95 yesterday each. So they're relatively cheap for leaps. They were the $125 calls. It's like the highest call that you can get. This stock, if I'm not mistaken, is currently trading around the 90 mark. So just want to check that real quick. So actually the low 80s, it's at 83 right now, and it looks like pre-market it's gone up roughly $1, so it's about $84 right now. So I obviously I shouldn't say obviously, I don't believe that the stock price is going to go up to $125 just because I buy a leap at $125, with the strike price being higher than that, 126 roughly. That doesn't necessarily mean that I believe it's going to go to that. Because there is a low IV on that leap, it is not volatile as of right now, and it's a pretty stable leap option. And if the price goes up to 90, possibly 100 in 6 months, that leap can go up drastically because of how it's leveraged, since a contract is more or less giving you the rights to exercise purchasing of 100 shares. So because it's leveraged, you see more upside, in case you don't know what leaps are. That's how I'm playing this, because I see this as a safe bet, in my opinion, for going up over the next year. And at some point, offloading that leap for a very nice gain. I don't want to say how much, because I don't know. It could do better than I anticipate if there is hype around green renewable energy next. You never really know with the hype factors around stocks. I mean, they could send them super high and then send them crashing back down. So I don't see this company ever crashing down or anything like that, only because it is such a solid, healthy company. But just to jump into Biden's bill very quickly, it really focused on 3 different areas that a company, if they meet these 3 different concerns, then they're probably going to reap benefits from this bill. So Biden is trying to push the environmental cost onto polluters. He's pushing for renewables directly, and he's trying to create a long-term middle class union job growth. So to address the first point, pushing the environmental cost onto polluters, just to summarize everything I have highlighted down here, yes, as an energy company, it does pollute the environment. However, they fare very well against their competition in this area, so it won't necessarily hurt them as much as all of their competition. As far as pushing renewables directly and creating long-term middle-class union jobs, there's a section in this post that basically goes into all the different sections of this stimulus bill over here and how all of this is broken down as far as how the $35 billion per year is going to be split out into the renewable space. And down here, this post breaks down in bullet point fashion how NEE is positioned to either get some slice of the pie for each one of those sections of the bill or not. And it looks like they are positioned very well to get quite a nice slice of the pie. So with that, I want to move into a separate play that I am also making, which is based on a Wall Street Bets post. So this one is on Vistra Corp. Vistra Corp is actually predominantly a coal company. However, they are heavily pushing into renewables right now. They also, as always, I'm going to give you the cons as well as the pros. So just to touch on some cons here, aside from being heavily in coal, they did go through a bankruptcy scare a little under a decade ago. It took several years to get out of that and to more or less solidify their position as a company that is roaring back. And that was maybe 3-4 years ago that they were able to do that. Because of that scare back then, their bond rating hasn't improved and it's still recovering. And so one of the stances I'm taking on VST, Vistra Corp, is that with how solid the company looks now, if they get a bond re-rate, and this is a big if they get a bond re-rate, that allows institutional investors to get in, because hedge funds and institutional investors usually have some kind of threshold where if a company's bond rating is below that threshold, they can't invest in them. So if there's a re-rate that bumps it up to a level where hedge funds and institutional investors can get in, that could do wonders for a stock like VST. So getting away from that point, there's some DD that this post goes into, which is basically that how heavily they're pushing into clean energy. They are massive in the battery energy storage space, and that there was also a very massive buy-in from insiders, which is actually, you can see from this infographic here. Links as always to everything I'm talking about down in the description. If you'd like to talk to us and any of the people in my Discord about stocks, I'm in there almost daily. You can honestly ask me anything, and I'm there just to hang out with everyone. No charges for anything. I don't believe in charging anybody for information that is public. But going back to VST, this is also another play on Biden's clean energy stimulus. There's many other points that this person makes. Just going through some articles that I was finding on Vistra, they have that massive 1.2 gigawatt per hour battery system at California, at a gas plant in California. They are one of the largest power generators. No, actually they are the largest power generator in the nation. Yeah, they have a 39 gigawatt portfolio. So like I was mentioning before, they are very, very solid now. Their PE ratio is around 11. And like I mentioned before, the average for the sector is 19. This, in my opinion, is not a $10 billion company. It is more, maybe 20 billion. So I see this company doing well over the long term. Again, these plays are long term. So for me, and when I say long term in relation to NEE, because it's a leap call, if there's a lot of volatility that drives the price up, which then leads the call option to go up, I'm inclined to sell and take advantage of that. If Vistra goes up, I'm not buying calls on this. I'm not necessarily so solidified in my position on Vistra as I am on NEE. However, I am taking a small common stock position in Vistra because I do believe it is solid, and I do believe it's a great play for renewables, all the attention that renewables will be getting over the next year, 2 years with Biden in office and pushing this stimulus bill. So with that, guys, I just want to wrap this video up. Hopefully you enjoyed the content. If you did, please like. If you're not subscribed, please consider subscribing. I'd really appreciate it. And until next time, guys, see ya.